Hey everyone, and welcome back to yet another video. We're talking stocks, we're talking exchange traded funds, aka ETFs. Now, before I get into this video, make sure you hit subscribe and the notification bell to stay up to date on all of the videos that I post. I cover a wide range of topics, everything from ETFs to individual stocks and everything in between. Now, if you watch the news, especially CNBC, I'm looking at you, over the last 2 or 3 years, when they cover the company Tesla, you've probably seen someone called Catherine D. Wood pop up with her crazy $4,000 and $7,000 figure price target on Tesla. But there's more to Catherine than just talking about Tesla on CNBC. She's actually the CEO and CIO of a company called ARK Invest. Now, you might not have heard of this company, but they offer index funds and ETFs that are a bit out of the ordinary. Now, you see, ARK Invest concentrates on investing in disruptive and innovative company in industrial automation, information technology, genomics, and financial technology. These are broad sectors, but ARK Invest tends to hone in on disruptive technologies such as 3D printing, genomics, digital payments, electrification, autonomy, robotics, AI, streaming, and so on and so on. So the ETFs are a bit out of the ordinary. They're not your standard S&P 500 index ETF from Vanguard. Catherine D. Wood does pretty much all of the investing herself, leaving the research up to her team over at ARK because she can't do both at the same time. And she offers 5 actively traded ETFs so she can buy and sell whatever she wants, and she's actively managing all the funds. She strictly follows a 10% rule, which means no position in any of the funds can exceed 10% of the entire fund's value. This is not unorthodox, but it's something to keep in mind. So lately, when Tesla has been surging from 200 to 900, she has had to sell shares in order to keep it below that 10% threshold. Plus, she has a couple of core holdings that pops up in almost all of the ETFs. Companies like Tesla, Illumina, Stratasys, Roku, and Square. So you will see those represented in all other ETFs. And some of the funds do overlap each other to some extent. And Catherine also believes in, and very much so tries to be ahead of the curve, where you have innovation, the grassroots innovation happens, then she wants to be a part of the early adopters, at least as an investor, and then ride the wave when the rest of the market comes in and joins into these companies. So most of these companies are supposed to be the next big thing, apart from Tesla and Alibaba and Amazon and so on. So this is a chance to get in on the ground floor. And these companies have yet to reach the lips of your CNBC news anchors. And Catherine D. Wood also thinks that all the passive investing in, all the blind money going into S&P 500 ETF and index funds creates huge pockets of inefficiencies in the market, which means, if everyone's just putting their money in the 500 biggest companies, no one are looking at the small, exciting companies. That's her bread and butter. And she believes that, when these companies eventually make it into the mainstream, she will already have the money there. And she, together with all the people who invested in her ETFs, will ride the wave up. So she doesn't think the market is in a great place right now because of all the passive investing. So this is just truly a gift to her. So not only are the ETFs she offers small, volatile, they offer great risk reward. You can stay ahead of the curve, and the big inefficiencies in the market means that there's a lot to gain if she's right on her investments. Other things to note about ARK's ETFs is that they are small, and thus quite volatile, and they do demand a hefty 0.75% expense ratio, which is way more than, a Vanguard that can offer 0.03 on the S&P 500 ETFs. So more volatility, you're paying more, and the funds also hold a very small batch of companies, usually not more than 20 or 30, while an S&P 500 ETF will hold, 500 companies. So they are very volatile, so keep that in mind. But they can be a nice add-on to your ETF portfolio, where you can be a bit more niche in your stock picking rather than just going with a broad index fund like the S&P 500. Now I'm starting off with her main ETF, which is just called ARK Innovation. Innovation is what Catherine is all about, and this ETF includes all of her favorite companies. So she has picked 2 or 3 stocks from all of the other ETFs, included them in one main ETF. This is by far the biggest with the most assets under management. And in this portfolio, you have her favorite companies like Tesla, Illumina, Square, Invita, Stratasys, CRISPR Therapeutics, Roku, 2U, Proto, and Inelia. So you have a bit of everything. You have electrification, 3D printing, autonomy, streaming, digital payment, peer-to-peer lending, and so on. So this is probably your go-to ETF if you trust in Catherine and her team. Now, next up on the list is Industrial Innovation, ticker symbol ARKQ. This is where she focuses on 3D printing, automation, electrification, and semiconductors. So it has companies like Tesla, Protolabs, Stratasys, Xilinx, 2U, Materialize, AeroVironment, Autodesk, Teradyne, and Splunk. So you do get some software as a service, some electrification, unmanned cars, unmanned aerial vehicles, and some 3D printing. So it's all about making industrial manufacturing and development quicker and better. So this is one of my favorite areas. I'm obviously a big holder in Tesla, and I could see myself investing in some of the other companies like Xilinx or AeroVironment, which are companies that I've previously had a look at. Now, next up is the Web X.0, previously called 2.0 ETF, ticker symbol ARKW. And this is where Catherine sort of imagines where the connected world and the internet is going. But again, you're going to have companies like Square, Tesla, Roku, Pinterest, 2U, Zillow Group, Amazon, Splunk, and various sites. So you get some digital payments, some peer-to-peer lending in there, some digital payments, as well as some streaming, and even Tesla. And I guess Tesla is sort of a computer on wheel, and keeps all the car connected, and they do a lot of AI, so I guess that's why Tesla is in there. Again, one of the most important sectors in the world where there's a lot of interesting happening, whether it's in cloud computing, digital payments, or other digital platforms. This is a very exciting space. Next up is the Financial Innovation ETF, ticker symbol ARKF. So this is all about figuring out how we're going to buy and sell stuff to each other more efficiently and maybe even more decentralized. So here you're going to have companies like Square, Tencent, Apple, Amazon, Zillow, Alibaba, and so on. So these are huge companies that are trying to figure out how we're going to interact with each other and make transactions in the future, whether it's through an app, a digital payment platform, a Visa or MasterCard, cryptocurrency, some other blockchain innovations. Who knows? But these are the companies that Catherine thinks are spearheading the development within the financial technology sector. Now, last but not least, it's a bit of a weird one. It's Genomics Innovation ETF, ticker symbol ARKG. Now, I will trust Catherine on this one. I know nothing about this space. Have a look at the list of companies. But the general gist of genomics is looking at our genes and the structure of it. Basically figuring out what's happening to you. Why are you the way you are? How can we change it? And how can we predict what's going to happen to you based on your genes? And warning here, there's no Tesla, there's no Square, there's no Alibaba here. So these are not even general biotech companies or healthcare companies. These are specifically genomic related companies. So be careful with this one. But if you're looking for an interesting space to have a look at, this might just be one of those. Now that concludes their list of ETFs. And I think what ARK is offering through these funds is a great way to invest where the exciting and interesting stuff is happening without having to do the research. Because let's be honest, we think we know, the general gist of all of these industries, but we don't know the nitty-gritty. We don't have our ear to the ground. So having someone like ARK Invest to do the research for you is brilliant. And they also offer a very, very high and, in my opinion, attractive risk reward level where you can invest in small, high growth, innovative companies and still get the great diversification of an ETF and the ability to get in and out of all the companies at once if you want to. Now, you do have to pay that 0.75% fee, which is really high, but I think it's much better than having to do the research and gamble on one of these companies individually. ARK Invest, they do deep dive kind of research on these companies and their products and their processes and the key management as well as their balance sheets. And if you want to know more about the philosophy and the way ARK and the research team thinks about these industries and companies, they publish podcasts and articles all the time. And if you're thinking about investing in these ETFs, keep in mind that they are more volatile, they are riskier, and they're more expensive than other ETFs, and they offer little in the way of liquidity, which basically means, there's not that many people buying and selling them. So getting in and out can take some time, or there can be more price inefficiency than in an S&P 500 ETF. And these ETFs will also experience huge swings both up and down regardless of the broader market. So keep in mind, these will not just follow the market. They can massively underperform or massively overperform. And they are also really expensive, which means over the long run, you need to take into consideration that 0.75 expense ratio, which is more than 25 times more than Vanguard's 0.03. So these funds have to outperform the S&P 500 to make them worthwhile. In closing, I think these ETFs can be a great add-on to fill out an ETF portfolio where you have your standard S&P 500 ETF. Maybe you've picked out an energy ETF or a technology ETF, but you want something more specific, more all-in, where you can get small companies and get exposure to where the good stuff is happening and to get a good chance of being a part of the next big wave of companies within these innovative sectors. So, if you start off with your S&P 500 ETF, you want more risk, you want more innovation, smaller companies, I would look at ARK Invest.